let's jump into some trade ideas this afternoon. I sent out some this morning, and one of the trade ideas I sent out was on gold. This is the gold futures. You can see that we have it up here, and you can see that gold has been falling quite a bit recently. And so we talk about having a few different ways you can trade something, right? You can follow the trend, and following the trend in this case would be being bearish and doing some type of bearish trade to follow the trend. We can be a contrarian and go against what the trend is, right? So being a contrarian is you would go and be bullish on this based on how this has been falling. And you can also be neutral, right? You can do something that's saying, okay, I don't think it's going to go up a lot going forward, or within the time frame that you're trying to trade, and I don't think it's going to go down anymore within that time frame, right? So in this case, let me bring this back up really quickly so we can see this. In this case, you can see that it's below its 200-day moving average, which is this gold line. So the 200-day moving average is actually above the 50-day moving average, which is this bluest line here. So this has definitely been a negative type of trend for gold. And then you can see down here at this RSI, the relative strength index, you can see that it was oversold there for a second, right? So, and it's basically in that range still. So to me, this is telling me, just by the chart and just looking at how gold has fallen so much, and that it could be a bullish stance here. But you don't want to try to play it directionally. You want to kind of give yourself a little room just in case you're wrong. So this is the low. The low is 1673. So let's look and see if we can get somewhere near that within the time frame that we're trying to trade. So this morning I sent out something with 35 days expiration. So let's bring that up. And we're going to type in the GC here. We go over to this trade tab, and you can see that I have this geared up already. This morning I was saying you want to collect at least 60 cents on this. It's still trading for 60 cents right now. And right now on the put side, this is a 10 delta. So, and the low of the recent low in the last 12 months, as you can see here, was the 1673. So we are actually putting this trade below that low, right? So I believe this is a very good high probability trade of us winning. We have a 90% chance of winning at expiration. We have a higher than that percent chance of winning if we get out at 50% after fees and commissions. So let's try to execute this trade here. See if we can get filled in this, and then we'll look at some other stuff here. All right, so if we get filled, we're going to give it a second here. I'll be looking at some other stuff. If we get filled, what we're going to do is we're going to hedge this, and we're going to hedge it in the ETF, the GLD. All right, so let's give it a second. Hopefully it'll get filled. We don't want to give up any more dollars on that, because if we give up anything, then we're not going to get the $100, at least $100 that we want. So then that wouldn't meet our criteria. All right, so let's jump into some other trades that we sent out as we let that play out. Gold has been down at least $4 all day, and then once we want to put it on, it's going to drop. So maybe one of you or a number of you have put this on earlier and you got filled, but we will see. All right, so looking at some other trades, the next trade I wanted to look at right now is Amazon. Amazon is going through its second day of Prime Day. I believe it's a 2-day event, and this you can see what Amazon has been doing. It's been basically going up into Prime Day here. Its all-time high is this 35.54. I was looking at doing an iron condor with it, with 31 days to go. So that's bringing this up on the TastyWorks platform. You can see we chose the 31 days because you have earnings coming out on July the 29th. So we wanted to beat the earnings time frame in this case. So looking at it on the put side, as we got this geared up already on the put side, we were selling the 13 delta, which is the 32.40 strike. and buying the 32.30 strike for a 10-point wide spread on the put side. On the call side, we were way up here at the 9 delta, and so buying the 39 or selling the 3900 and buying the 3910. And once again, the high on Amazon was around 3500. Let's look at that one more time. It's 3554, and on this trade we're way down there, way up there on the call side at the 3900. So I really like this trade. You got a really great return on your capital at the 160. This morning I was saying you wanted to do this at least 165. I still, or see 167. I still think this is a very good trade at this price. You could put in a little higher and see if you can get the 167, but this 162 meets the criteria as well, as you can see on the buying power. So I think that if you're afraid of the call side, this is a good play with the call side, because it has to go up significantly before you even touched almost 400 points that this would have to go up. But obviously it's up about 30. I think it's up about 30 points since I've seen it this morning. So Amazon, not that it can't do it, it's just not probable based on an implied volatility and its expected move within the 31-day time frame. All right, so that's Amazon. Please interrupt me at any time if you have any questions regarding any of those trades. And we're going to move on to another trade now. If you have a trade idea that you want to present to the group, please unmute your mic and present, and let's present it to the group. Otherwise, I will continue with some of the trade ideas that I sent out this morning. And so the next trade I wanted to look at, a yellow highlighted trade. The next one I had this morning was the NASDAQ. So this, you can see that the NASDAQ has hit its all-time high this morning. It's above its 50-day moving average, which is that bluish line, way above the 200-day moving average, which is that gold line. It's basically been riding that 50-day moving average for a while. Looks like it could be a tiny bit breakout. You guys know, you've heard me say over the last few days that I feel like the NASDAQ is going to 15,000 before it goes to 13,000. When we looked at the statistics, the put side, the 13,000 was actually a higher delta than the 15,000. But just by the tape reading, it just feels like it's going to do that. And the last 2 days has validated that, but it's still obviously a lot of points, about 800 points before it can get to the 15,000, about just a little bit more than 1,200 points to the put side. But when things start to go bad on stocks and definitely stock indexes, the velocity will be to the downside. That's why it's skewed. It's the 15 delta was the 13,000 when we looked at it. All right, so looking at this trade, let's go over to the TastyWorks platform, and let's bring this up. And I believe we still have this geared up. We got the 59 days to go. On the put side, we were selling this is way down here. We're selling the 9 delta, which is the 12,200 strike. That was once again a 9 delta, and we were buying the 12,140 strike. That is a 60-point wide strike on, or spread on, the put side. And then on the call side, we were doing a call spread because the NASDAQ is up quite a bit. But keep in mind, I said I believe it's going to hit 15,000 before it hits 13,000. So we're going to play that. We're going to play according to that. So what we're doing is putting the call side at something that's higher than the 15,000. So 15,500 in this case. This is the 8 delta. So the put side was a 9 delta. This is the 8 delta at the 15,500, and then we're buying the 15,560 here. And this is also a 60-point wide spread. This is almost a evenly matched. You can just say it's a traditional evenly matched iron condor. 60 point wide on the put side, 60 point wide on the call side, and basically the same delta level here. So this is a yellow highlighted trade. We were talking about this can be this can be a good trade for a small account as well, something that's at 2,000 or under 2,000, because the buying power effect here is insignificant. It should be similar to this for an account that doesn't have anything on. As you know, we do have something on in the NQ already. We have this position on with 24 days to go. This is like a skewed iron condor, 2 positions on the put side right here, and 1 position on the call side. And then we have some hedges going on here in the MNQ, which is the micro NASDAQ futures. All right, so let's jump back over. Let's jump back over to this NASDAQ position here. I like this trade. Let's see which one gets filled first. This morning I was saying you want to do this at least 6.75. This is trading at 6 or 7.25 here, so this is even better. So this is once again a yellow highlighted trade. If we get hedged, if we get filled, we will hedge on the call side this time. Almost 100% of the time we hedge. I don't say 100%, but most of the time, at least 68% of the time, we're hedging on the put side and 1 standard deviation of the time. So that's Cineas here, and let's see if we can get filled. The mid just changed on us as we did that. Let's go to this working. So the mid just dropped to 7. We're going to put that down at 7, then we'll let that sit and see which one gets filled first for us on these trades. So I still like this 126. And we're going to send that, and it's going to sit there for a second, and we'll see how it plays out. So this is what it's saying the mid is now after we put that in, and our price is this. You really have to be about 25 cents below so you can get filled, but we'll see if this price was really 7.25. We'll get filled here in a second. We obviously got this one still sitting. We don't want to put on 2 of these, so we're going to see which one gets filled first as we go through a couple more trades. All right, so let's continue. Let's go in here and let's see if this NASDAQ position gets filled. If it does, we cannot adjust this gold one, unfortunately, you guys. If we go down to the 0.50, we will not get the dollar amount that we want. So, but we can still adjust this NASDAQ one down to the 675 and see if we get filled. So we go there, and there we go. So we got filled on that like we said we would if we went down to that. So what we're going to do is cancel this gold trade here because we don't want to get filled in both this afternoon in this account, in this demonstration account. All right, so let's jump back over to this NASDAQ and let's look to hedge, right? So we're going to go into this micro future NASDAQ options, and we said that we were going to hedge the call side in this case. Feel like it's a little bit more risk to the upside. So we put on the original trade at the 59-day mark. So we're going to go into this 59 days and we're going to look to hedge here at around the 30 delta. So if we jump over here, you can see that the 30 delta is way over here, and we're going to buy something around here. Let's see, I'm going to buy this, and let's try 30 points wide, and let's see how much that's going to cost us. So right now that's saying it's going to be about $20. We have about $30 that we can use. So let's try this. We're going to do that. It's not going to be a huge hedge, but it's going to be a hedge nonetheless. And let's see if we can get filled at this price. We're going to send it, and doubt if we get filled right there. But what we're going to do is move it to the 13.25. If we don't get filled there, we might adjust it a little bit, cancel the trade, and go a little higher. All right, so that we didn't get filled there, which is unfortunately we didn't get filled. All right, so let's go give it a second, and not we don't have, for time purposes, I'm going to play around with this. We're going to delete that, go back in, do a replace order, and then what we're going to do is on the TastyWorks platform, you can move it away from at the money by using these arrows here down here. So what we're going to do is use these arrows, and we're going to move it away a little bit. And all right, so that is there, and we're going to put in 13. Give me there, and we're going to send this and see if this is going to get filled this time. And we try to go a little higher than what they would normally give us. and that's not no love. This is the Nasdaq looks like it's shooting up, and that's not a no benefit for us to get that filled while it's shooting up. So everything is, even the Russell has jumped up now. I guess it's people need to buy stuff now. All right, so we're going to cancel that one more time, everyone, and then we're going to go back, and then we're just going to move this. We're going to move this up to the nearest 29 delta, because it's just costing so much on the call side right now. We're not getting that big of a hedge, but we're going to do it anyway. And so I'm going to just sacrifice a little bit, because we have a little bit more than 30, because we got like $128, $26 or something like that. So I'm going to put this there so we can get filled right away. All right, so we got filled. And so once again, I'm calling this a yellow highlighted trade. The Nasdaq is up 100 points this afternoon, and we got the trade on that we wanted. So if we go to here, these filled orders, this is the trade that we put on.